Nonfarm Payroll is a statistical report released by the U.S. Bureau of Labor Statistics on a monthly basis. It provides data on the total number of paid workers in the U.S. economy, excluding farm workers, private household employees, and nonprofit organization employees. The report is based on a survey of businesses and government agencies and is considered a crucial economic indicator. The NFP report is usually released on the first Friday of every month and covers the employment data for the previous month. For example, the report released in July will cover the employment data for June. The NFP report includes information such as the total number of non-farm jobs added or lost, the unemployment rate, and average hourly earnings. The NFP report has a significant impact on the economy and financial markets. Here are a few reasons why. 1. Employment trends. The NFP report provides insights into the overall health of the labor market and reflects employment trends. It gives an indication of whether the economy is expanding or contracting and helps policymakers, economists, and investors assess the current state of the economy. 2. Monetary policy. The Federal Reserve closely monitors the NFP report as part of its decision-making process for monetary policy. If the NFP report shows strong job growth, it may indicate a robust economy and potentially lead to expectations of higher interest rates to manage inflation. Conversely, weak job growth might prompt the Fed to consider measures to stimulate economic activity, such as lowering interest rates. 3. Market sentiment. Financial markets, including stock markets and currency markets, can be highly sensitive to the NFP report. Positive employment data can boost investor confidence and lead to increased buying activity in stocks, potentially driving up market indices. Conversely, disappointing job numbers can have a negative impact on market sentiment and lead to a decline in stock prices. The impact of the Nonfarm Payroll report on gold and the US dollar depends on whether the report is positive or negative. 1. Gold. Positive NFP report. Strong job growth and a healthy labor market suggest a strong economy, reducing the demand for safe haven assets like gold. This can lead to a decrease in gold prices. Negative NFP report. Weak job growth or economic uncertainty may drive investors to seek safe haven assets like gold, increasing its demand and potentially raising its price. 2. US dollar. Positive NFP report. Robust job growth is seen as a positive sign for the U.S. economy. It can increase demand for the U.S. dollar as investors expect the Federal Reserve to potentially raise interest rates, making the currency more attractive. This can strengthen the U.S. dollar. Negative NFP report. Concerns about economic growth and potential policy adjustments may reduce investors' exposure to the U.S. dollar. They might seek other currencies or assets, leading to selling pressure on the US dollar and potentially weakening it against other currencies. A positive NFP report can weaken gold prices and strengthen the US dollar, while a negative report can bolster gold prices and potentially weaken the US dollar. The ADP report is another employment report released by the ADP Research Institute. It provides an estimate of private sector employment in the United States, excluding the public sector and agricultural jobs. The ADP report is typically released a few days before the NFP report and is often considered a precursor or preview of the NFP data. While the ADP report and the NFP report both provide information on employment, they have different methodologies and sources of data. The ADP report uses payroll data from ADP's client base, which primarily consists of private businesses. While the NFP report is based on a survey conducted by the BLS that includes both private and public sector employment. Although the ADP report is not as widely regarded as the NFP report, it can still influence market expectations and sentiment to some extent. Investors and analysts may use the ADP report as an initial indicator of potential job growth or weakness before the official NFP data is released. However, it's important to note that the ADP report has been known to deviate from the NFP report, and the latter is considered the more comprehensive and authoritative source of employment data in the United States.